What's up, guys? Blake Baker back with another video. I really appreciate you taking the time to watch. As always, drop me a like and hit that subscribe button. So, huge news in the real estate world last week. I made a video about a month ago talking about how Zillow was inflating the market. They overpaid for way too many homes, and that's now proving to be their downfall. The overinflation they caused in some markets made it very difficult for the middle class to buy a home. Buyers have been competing against multiple offers, cash offers, and waive contingencies, which is not a very good way to go about buying a home. Thankfully, this crazy recent price increase is actually starting to level off, so things are looking good moving forward. Now for the big news. Zillow halted home buying completely, and now they're laying off 25% of all of their employees. The stock price dropped from $168 a share to $89 a share. They now have 7,000 homes for sale for $2.8 billion. In Houston alone, they're unloading 64% of the homes they currently own, and they're working to unload more as we speak. According to Yahoo News, Zillow lost over $550 million combined, and they lost an average of $125,000 per home that they sold in the third quarter of 2021. According to the CEO, home buying was too volatile, too risky, and assessed too few customers. He goes on to say, we went into the business as a big swing on the bat that we could actually predict the price of a home 6 months into the future and do so with a very narrow margin of error and have our hold times be short. He then goes on to blame COVID and supply chain issues for the losses, I guess. And he stated that a record-setting market has made predicting the price of a home 6 months into the future very difficult. Okay, I agree. He said, we looked at the volatility in earnings and reporting, and we said, hey, we don't need to be doing this. We sit in a privileged spot in our decision-making process. We now have a bunch of tools, and we can get rid of these homes and make them move in a more asset-like way. Of course, he's going to put a positive spin on it after something pretty negative happened to his company. He goes on to say, this is not a fire sale. We will do it the right way. These are appreciating homes and they are real assets, and we will wind down our inventory in an orderly way. The market should be for your average home buyer, and I think it's kind of dirty how they came in, tried to scoop up all these homes in regular residential neighborhoods where you and I live. We work hard every day and we deserve a good place to live, and when it just becomes unaffordable, it's not right. So my take on this, I would say the big question is, are they anticipating a market slowdown? And because of that, are they just dumping all their inventory now? I think that could be part of the factor, but it's not 100% the factor because they just overpaid. I knew there was something fishy about it. I actually lost a listing earlier this year because an iBuyer was paying about $10,000 over what my comp showed, and all cash and everything. So I even told the seller, I was like, hey, I don't blame you one bit for taking that. So Zillow's already done some damage, but at least they won't inflate our markets anymore. Not in the near future anyway. Thanks for watching, guys. Comment below. Let me know what y'all want to hear about. If there's any video ideas you have for me, anything you're curious about. Doesn't have to be about homes specifically. It could be about investing or anything. Just comment below what you think would be interesting, and I will check it out. I'll try to come up with some new content for you guys. Appreciate it, guys. I will talk to you later.